help you. In the following minutes, I'll show you how I was able to transform my life. Watch this closely and thank me after that.
Thank you for joining us today. Another video brought to you by USDA Mortgage Hub. Homebuyers that have questions about the USDA rural housing loans can reach us at 1-800-691-8826 or visit the website usdamortgagehub.com 7 days a week. If you find this information useful, please be sure to hit your like button and subscribe to the channel, as programs and requirements do frequently change, so we want to make sure that you stay up to date to the latest guideline changes. In this video, we're going to talk about some of the new changes for the coming year, and also the basic highlights and program requirements that homebuyers want to know. First, we're going to discuss some of the USDA loan highlights. This is, again, a government-backed mortgage that offers 100% financing in approved eligible locations throughout the U.S. And what we mean by eligible locations are areas that are deemed more rural in nature. This loan is geared for those areas that still meet the requirements or still deemed rural locations. And homebuyers are often surprised to learn exactly how many areas are considered rural today. We're going to talk a little bit about that though more in the upcoming slides. The USDA program, in addition to it being 100% financing, the program does allow the buyer's closing costs to be paid by the home seller. This helps reduce, again, the out-of-pocket expenses to the home buyer. So home buyers can have the seller pay their closing costs, or the buyer can also roll the closing costs into their loan with a supporting higher appraisal. A little example of what we're talking about below there, you can see a example being a home purchase price of $125,000. Let's say in this example, the home buyer will need approximately $5,000 for their closing cost, and then also all their prepaid impounds or escrows for taxes and home insurance. As long as the house appraises for at least $130,000 in this example, the home buyer would be permitted to roll in and include all of their closing costs into the loan. Any buyer can apply for the USDA loan. It isn't reserved exclusively for first-time home buyers. Again, move-up buyers are welcome to apply. There are no loan amount limits with the USDA loan program. A lot of government programs like FHA loan, for example, can have certain loan amount caps depending on the location in the county. USDA does not have loan amount limits. Buyers qualify simply based on their debt-to-income ratios, which we'll look at a little bit more in the coming slide. There's low monthly mortgage insurance, or more commonly known as PMI, when compared to FHA loans. So this is something to remember. If you're a home buyer that's currently looking at, or maybe even already pre-approved for an FHA loan, and if you also happen to meet the eligibility requirements for USDA, meaning the home is located in an eligible location and also the income for the household meets the eligibility requirements, you may want to also take a look at the USDA loan. Again, even if you have a small down payment that is required for FHA, USDA is worth the second, really a closer look, just because of the savings on the mortgage insurance when compared to FHA loans. Again, many buyers are still surprised to learn exactly what locations are still considered rural. Many suburbs just outside of major metropolitan areas are still approved for the program. More highlights. The program offers, like really all government home loans, government-backed loans, offers a secure 30-year fixed rate terms. There is no early payoff or prepayment penalty. Again, like all other government loans. It's a common question we receive too, as home buyers will ask, will we be penalized if we sell our home and move? Maybe a home buyer has to relocate for a job a year or two after they purchase their home with the USDA loan. Can they move and sell that home without any penalty? Absolutely yes. There's no penalty for doing that. And again, USDA is not reserved just for first-time home buyers. Move-up buyers that are buying their second or third home, they're also welcome to apply, assuming they also meet the eligibility and qualifying criteria that's in place. Most homes for sale that are located in eligibility are okay for financing. Again, with the USDA program, it's really more about the physical location of the property and not who is selling the home. We receive that question a lot. If there's a special list of properties that are eligible or approved for financing, maybe a list by USDA. It doesn't work that way. The program is really for, it can be any home seller, any buy-owner type sale, any real estate company that's selling a home, or bank-owned homes, distressed sales. The banks, as long as it's physically located in a USDA eligible area and the home meets the basic condition requirements that are, and again with USDA, it's really similar to all the other government loan programs as far as the condition of the home. It has to be in generally good move-in condition, not perfect, but generally decent move-in condition. It can't be a complete rehabilitation type project. And all the basic safety functions, most importantly, have to be up to date. There are also refinance programs in place for homeowners that currently have a 502 guaranteed loan. Many flexible refinance programs. You can read more about that on the website, again at USDAmortgagehub.com. Some more about the USDA mortgage eligibility. Again, it's important to remember that unlike other home loans, USDA loans have a two-step process, really, where you're talking about two things regarding eligibility and then also all the qualifying requirements. Qualifying requirements are the things that have to do with the minimum credit score, job history, debt to income ratios, and savings and things like that all loans have. But in addition to that, the USDA mortgage has the eligibility requirements regarding the location of the property. Again, it has to be in a USDA approved area, and home buyers can visit the website and they can find the map, the link to the map where they can input a property address and check to see if it's eligible or not. It's very simple to do. Again, just visit the website and you'll find the links there to be able to check not only a property, but also it'll let you zoom out and kind of see an overall area, shaded area, so you have a good understanding of maybe how far or close you are to the eligible locations. Household income limits. This program does have limits or restrictions on how much income the household can make. It's important to remember that this applies to all members in the household that generate income, even if they're not listed on the loan application. The good news is there are new higher income limits that have just recently been announced, and these income limits should remain in effect through 2019. Basically, for a household of 1 to 4 members in the household, for most of the country, most of the U.S., the gross income limit is $82,700. And then for households, larger households that have 5 or more members, the income limits increase to over $109,000. And this is for standard locations. Now, certain counties, certain high-cost locations, more expensive areas, they allow for even much greater income limits. And again, you can visit the website and find the links to the income calculator. It'll take you to the USDA site where you can input, answer a series of questions, a few questions, and then it will tell you what the income limit is for your area based on the information that you provided. It will tell you the gross income limit, and again, for the 502 guarantee program. Just a little bit regarding the loan qualifying requirements. Again, this is once you determine you have you're purchasing a property in an eligible area, you've determined your household income limits are in line, you do not exceed that, you're okay there, then you want to move to the loan qualifying and make sure that you meet the qualifying requirements. And this is very similar to other programs like an FHA mortgage or maybe a conventional mortgage, where basically it's a few critical components they look at, starting with really the credit score, the income, debt-to-income ratios, and also employment history. So the credit history, USDA loans, most lenders and banks that offer the program will require a minimum 620 credit score to be eligible, and this doesn't automatically guarantee loan acceptance. That's important to remember, as there are for if you're a home buyer that may have had a serious financial hardship in recent years. You may have additional waiting periods even if you have a 620 or better credit score. So that's something that you'll need to check on with the loan specialist during the application process. Job history, again, just like most other mortgage programs that are available out there today, a 2-year solid job history would be required. That doesn't mean you have to be with the same employer. That's a question we receive. Do you have to be working for the same employer for a 2-year time frame? Absolutely not. You can switch employers. That's actually very common. What they want to see is that there is a pretty steady history, where there is no large gaps in between jobs. If there's let's say a 6-month gap from one job to the other, they'll want to have an explanation of what happened there. And there are certain things that can be explained. Maybe there was a medical situation that you had, and you were out of work for a while. It can be a variety of things. Yeah, a 2-year history, and also we want to note that recent college graduates, if you recently finished college and you went to work after that and you don't have a 2-year job history, there are exceptions for that for recent college graduates. Income and asset documentation, again, just like most other mortgage programs, you'll have to fully document your income and assets. This means W-2s for borrowers that are regularly employed. Self-employed borrowers will have to have two full years of tax returns. So full documentation when it comes to income. Debt to income ratios, 30% of your gross monthly income, you shouldn't allocate more than 30% towards housing expense. And this is your principal, your interest, your taxes, and your homeowner's insurance, and any homeowners association fees that may be included. So that's the general rule of thumb with USDA mortgages. It's 30% of your housing expense. So an example would be let's say there's a borrower that makes $4,000 a month in gross income. In that situation, the borrower shouldn't be spending really more than $1,200 a month towards the housing expense. And you can, again, go to the website, and there's a handy calculator there that will help you calculate payments based on your purchase price. So you can see what the real world payments would be when you include in there the mortgage insurance and taxes and homeowners insurance costs. Common questions that will be asked during the application process. It's very simple. Really, the loan specialists want to know things like your residence history for the past 2 years, your employment history for the past 2 years, your gross income amount, the duration, if you're getting paid bi-weekly or monthly, your banking and asset information, maybe your bank account, your approximate balance in your bank account, if you have any retirement account, maybe a 401k or IRA, they'll want to know what the approximate balance is in those accounts, and then you should have account numbers associated, your social security, your date of birth, basic contact info. Really 95% of the information is things that you probably already know by heart, and or you have it right there in front of you somewhere already. It's not too complicated as far as that information that will be asked. Also, during the application, they'll ask you a series of questions, really some yes and no questions towards the end of the application. And again, the whole process to do your application for the loan, really it takes 15 minutes to go through it. And most of the time they will tell you on the same day or the following day if if you've been approved for financing, and then they'll go over the loan approval, the amount, and all the details that you're going to want to know. Again, just some more on the documents that will be required: your last 2 years of tax returns and W-2s if you happen to be regularly employed. Last 2 months of pay stubs and bank statements. You want to hold those things, and also a copy of your most recent retirement account statement. If you have a 401k or IRA, those are generally quarterly statements, so you probably want to get your most recent quarterly statement. Renters should have their landlord's contact information for the rent verification, and then also a copy of your ID or driver's license. Homebuyers that have questions, of course, can reach out to us 7 days a week by visiting the website at USDAMortgagehub.com. On the website, you'll see the quick contact form, and you can simply submit that and speak to a specialist. You can also call 1-800-691-8826. Thank you for listening.
Cool, right? Call us or click the link below. We look forward to working with you.